We're so excited to join you here for this conversation.
Yeah.
Well, I'm James from Obvious Ventures, and I'm excited to have this conversation with Sofia because we are fellow voyagers on similar investing missions, but on different continents. And at Obvious Ventures, we describe ourselves as world positive venture capital, and Sofia's firm is future positive capital. So we want to share with you today a little bit about our shared thesis in investing in tomorrow and in building disruptive solutions to the world's biggest problems, but also talk about some of the inherent risks that come in these new advanced technologies, these deep tech approaches to these big problems. And then lastly, talk about some of the best practices for founders, some of the solutions that we've uncovered for not just why we're investing this way, but how we're investing this way. So, Sofia, maybe I'll ask you to share with us a little bit about the origin story of Future Positive.
Yes, we'd love to. Hi, everyone. So it's been quite an organic journey. So my plan was more to start a company that was leverage what I call advanced technologies and was tackling a global systemic challenge. So something that is very difficult to tackle, that is unlocking a massive opportunity that is overlooked and that requires radical innovation. So I came to it from a problem, a kind of angle. Long story short, kind of went to tech entrepreneurship, venture capital, and I realized that when I was an investor at Index Ventures that most of the venture funds, they're great, but they just don't focus on what we're interested in, right? So whether you look at it from a technological angle, I always mention the statistics because it just still blows my mind. In Europe, only 17% of the funding in venture capital in Europe is dedicated to the type of companies we're interested in. But if you really look at the number and you dig into that number, it's fintech, media, gaming, marketing. So none of what we're looking at.
Not what we would call
exactly.
deep tech.
So I was like, interesting. So from a demographical angle, it's the same story, right? Most companies will focus on the top of the pyramid, so us. People with strong purchasing power in urban areas where there's so many more color to demographics, age, culture, gender, etc. Or from a thematic perspective, which is what I'm very passionate about, is that what are the greatest challenges and how can we bring innovation and capitals to that? So realizing there was no fund in Europe with that thesis, I decided to start one.
Amazing. To share the story of Obvious Ventures.
I'd love to.
Different continent, same mission. We started a little over 6 years ago, and I'm fortunate to have amazing co-founders. I co-founded the firm with Evan Williams, who co-created Blogger and Twitter and Medium, is now the CEO of Medium, and Vishal Vasish, who helped build Patagonia, the outdoor apparel brand.
Of course.
Spent 10 years with Yvon Chouinard building that incredible company. And the three of us came together with this idea that venture capital should get back to its roots. We should be taking risk, funding amazing entrepreneurs, building disruptive problems that humanity faces. And our thesis was not concessionary. Our thesis was these new kinds of companies will outperform in their categories. And they will reimagine trillion-dollar industries like food, energy, transportation, healthcare in ways that move humanity forward. And 6 years ago, traditional venture capital was not thinking that way. Traditional VCs were funding media and games and enterprise software, maybe some ad technology. So we had a very contrarian point of view.
Yeah.
And initially, we had to use a lot of our own money to get the first fund started. And we've been fortunate to grow since then. We have over 65 investments, a lot of amazing entrepreneurs doing exactly what we're here to talk about, disrupting huge industries in world positive ways.
Fantastic.
So let's talk a little bit about how you think about your investment thesis. I know we use similar language, that breakthrough technology, disruptive technology can solve humanity's biggest problems. Do you want to share a couple of examples or of that thesis and where you guys are hunting
Absolutely. So the framework, like the simple one is like at the intersection of advanced technology and those global challenges. If we go granular, it would be technologies that are, we won't do web and mobile, sort of digital, what we call digital internally, but we wouldn't do life science and things that really required hard biotech. So we're in that kind of middle ground where we think that the cycle of venture capital, because we have a classic cycle, would be compatible. So that's kind of the technological side where Europe has and where you have an incredible talent, and maybe we'll touch base on that. So in terms of sectors, we're opportunistic, so we like to see things that we never even think about, right? So that's always kind of the daily knowledge that we get from entrepreneurs is phenomenal. But internally, we would be focusing on sort of 4 to 5 themes with my two co-founders. And at the moment, what we're very excited about is we look a lot at fashion. So we try to break it down in a simple way about what is the most damaging company. Again, industries
right.
like you do, and where there's a lot of opportunities. And fashion is just ridiculous, right? 100, just for you guys, so you have an idea of the magnitude, is 100 billion garments produced every year. We throw out 85% of it, that polluting 20% of our water. So that's what we call a massive problem, right?
Yes.
So look at companies that manage to recycle, renew materials, etc. Ocean tech is something that I'm particularly obsessed with at the moment. So 95% of the ocean isn't mapped, isn't known. And that's really the next frontier when it comes to energy resources, health resources, new molecules, but also the preservation of our oceans for the event. So, and that's something, again, where Europe is quite good, the Nordics, France as well, Sofia Hmich, where you have some interesting ecosystems. Constructions, like producing 6 to 8% of the gas, very little innovation. So please, guys, if you do something in the space, come to me. And here as well, like sort of materials, how we just build this kind of next generation of materials to build stronger buildings, but a more like sort of carbon light in that case. And one of my co-founder, Alex, is still really much interested in mental health and genetics in general, so that's something you look, and agriculture, which remains close to my heart, so I'll keep looking at
That's
things.
great. A lot of overlap. To share quickly for the audience some of the themes we focus on at Obvious, we describe 3 pillars of investing: healthy living, people power, and sustainable systems. And those 3 came from some of our earliest investments as a team. We were fortunate to be early investors in a company called Beyond Meat. And it was part of a thesis tied to climate, that the amount of greenhouse gases that humanity creates in raising, clear-cutting rainforests to grow soybeans, to feed to animals, to raise for animal protein is unsustainable. And it doesn't scale as we scale to 9 billion people on the planet. So why don't we make new, nutritious, delicious alternatives, new kinds of meat directly from plants? And Beyond Meat was one of our first investments there. Also in healthy living, we were fortunate to have a Finnish entrepreneur, Sami Inkinen, as a venture partner when we started Obvious. And we were his first check into a company that he's building in California called Virta Health. And it's focused on reversing type 2 diabetes. And it's a great example of the kind of mission-driven, purpose-driven entrepreneur we want to back.
I might ask you a question like this. So you were very ahead of time, actually, compared to, so we started the fund 2 years ago, and we definitely looked at what you were doing on the other side. And so what kind of made you jump and back those entrepreneurs despite what all your kind of friends and other people in the industry were doing? What made you make that kind of leap of faith?
That's a great question. I think we had building conviction amongst all 3 co-founders that technology was becoming the new villain in Silicon Valley, that the focus on hypergrowth, the misalignment of a lot of tech business models with what's actually good for society was of deep concern to us. And Ev, with his work in Medium, he actually changed the Medium business model to remove advertising and move to subscription to better align quality of content with readers, right? And the work that Vishal had done at Patagonia, where every business decision is tied to what's good for the planet and the environment. And we wanted to practice what we preach, and we genuinely believed then, and we now have proof points with some of our companies now, that there are better ways of doing this. We're growing diamonds in plasma reactors instead of mining them from the earth. That's a perfect example of a world positive company. It's very profitable, but it takes all of the negative externalities of mining and flips them into these carbon neutral world positive diamonds.
Phenomenal, super inspiring.
So I'm glad that you knew of our work.
Of course.
Maybe switching gears to our second topic, talking about both of our work. Both of our firms do a lot in deep tech, AI machine learning for things like medical advances, robotics, synthetic biology, gene editing. These are incredibly exciting new areas. And I suspect we have some entrepreneurs in the room working in exactly these areas. But they also have very, very high risk potential, both in their potential misuse, but also what we call unintended consequences. And there's a phrase that we use at Obvious Ventures. We say that exponential technology requires exponential responsibility. So I'm curious how you guys think about this, and what conversations do you have with your founders about thinking about those unintended consequences?
It's a very, very good question. Well, what we found out first is that entrepreneurs are actually really concerned about this themselves. So we made 3 investments so far with FPC, and they were all, and prior to that, a few more, and in that sort of thesis, but they all had some deep thoughts on it. So they tried to, from the get-go, to assess the biggest unintended consequences and try to de-risk them through their process. But inevitably, it's something that we all have to be super conscious. The things that for me is more out of our control is more where the capital comes from. The reality is that no matter what the founder wants to do, there is a pragmatism that goes with it. And even though we genuinely are convinced that the company we're backing will outperform, and we're close to demonstrate that in a very big way, but the reality is that those companies, there is a funding gap, especially when you're early stage, prior to 10 million revenue in Europe, talking for Europe again. So a lot of investors will come and take a seat at the table at the board meetings, will have a say in that topic. So, and there is a data that is just, again, really blows my mind, and we don't talk enough about it, in my view, is the importance of Chinese investment in Europe. And again, I'm not saying this is bad, but I think this is we need to acknowledge that this is different from what we used to have. China invests 9 times more in Europe than in the US. And the only thing they're interested in is deep tech. We're not going to teach them to do e-commerce, right? So when you start to have this, and some of them are really good, but there's a part of an opaque, right, set of future decisions that we don't have anymore. So first, more like, okay, so our role is to maximize the potential and the possibility to offer maximum options to the founders we back, so we make together a conscious choice. But I do expect that sometimes those conversations will be difficult.
So there's where the capital comes from, and also where the technology ends up in terms of acquisition.
Which is like this, the acquisitions, for sure. Yeah.
And that can create unintended consequences. Maybe the founders never imagined their technology being used for a different business model. I think about the UK company DeepMind that was the leader in building advanced general intelligence AI, being acquired by Google, and putting that technology to work around advertising business models might not have been what the founders intended.
Well, Babylon, this company in the UK, which is a health company that basically created a chatbot that is 12 times more efficient than the NHS, and kind of not just so they can just, by the way you type, what you type, able to tell you what kind of GP you need to go see, and just have a more efficient system. And the latest event was from a Chinese investor. Before that, it was like, okay, I'm going to access 1 billion data.
Wow.
Is that it? So for a deep tech company, this is gold. So how you manage? So that's exactly this kind of thing. It's going to improve the product.
You may find this interesting, but in the United States, we have a piece of legislation with the acronym Sofias that actually prevents Chinese majority ownership or significant investment in advanced technologies that could be considered a national security. So we have now a government regulation layer around that. Sounds like that doesn't exist yet.
And that's why
in the EU.
they invest in Europe more. It's because of that. There's not any more door to the US ecosystem. And Europe and France in particular is at the moment very focused on what they call tech sovereignty. So I think it's something just, again, we're doing this for you guys. And I think this is something that you just maybe could read about. That's kind of what are the upcoming regulation about tech sovereignty in Europe and in the US. And because that's going to define a part of your future potentially.
So let's get back to the fun stuff, which is reimagining these massive industries. Both of our firms have done work in creating new forms of protein, whether it be mealworm protein or plant protein, right? And it's interesting that if you look at the history of how we've scaled agriculture, I think the early inventors that figured out how to scale animal agriculture helped feed billions of people, and they were mission driven, but maybe they didn't understand the unintended consequences of using antibiotics in livestock, which has now created superbugs in our health system and is jeopardizing human health. So one of the things we like to do is work with our entrepreneurs to take a longer term view, to really role play or game theory out all of the different facets. And we've built a toolkit of some ways to do that. And so I thought we could brainstorm a little bit, and I have 3 points to share with the room of just ways that we work with our founders. And the first is at the earliest stage, which for venture capital, we start with a term sheet. That's the kind of the beginning of an investment conversation. And at Obvious, we created and open sourced something that we call the World Positive Term Sheet. And I encourage everybody you can Google it, and we have sample templates of this. But the idea is a simple one, which is in addition to economics and control in your term sheet, write down your mission, write down your core values, write down how you're going to approach diversity on your leadership team and your board, sustainability in your supply chain and your product, pledging, giving, other issues that you don't want to be misaligned with your investors on 6 days or 6 months or 6 years from that investment. And we have found that just writing that down, getting that initial alignment between investors and entrepreneurs really helps keep a North Star, keep a compass for what the purpose of the company is.
Yeah, we do something, but what we define with them is sort of goals, what we call the positive goals. Very simple, like on the core aspect of the business, and say, okay, what do you want to achieve in the short term? Again, that pragmatism, which is what we want to do in 10, 15 years, and that's so wonderful to think about it. So we have that goal, but then it's okay, what's year 1, year 2, year 3? And some of them, some of the companies actually took that and they became their KPIs, which was quite powerful. So company Alex invested in, and so yeah, I think that they're very grateful actually that you pose and that you do the work, because most of investors just don't care. So the fact that you say, hey, that's important for us, I really didn't realize how important it would be for the entrepreneurs. That's really incredible.
I've had cases where I've had to convince the entrepreneur. There's a seed investment that we led, a company called Incredible Health that's trying to help solve the nursing shortage and help nurses find and do their best work. And the founder, Iman Abu Zaid, said she was too busy, doing all of the million things that an entrepreneur has to do at the seed stage. But I really pushed her and her co-founder to write down their mission, their purpose, their values. And then she later said it was the most impactful work that they did. It helped with recruiting amazing talent. It helped with focusing their product roadmap on what to build. And roll the clock forward, that company, when she went to raise her Series A financing, she received term sheets from Sequoia Capital, Benchmark Capital, and Andreesen Horowitz. So I think that purpose-driven approach worked pretty well numerically later.
It's a talent for sure.
The next idea I wanted to share is this idea of after we've invested in a company, and we're often sitting on the board playing a governance role. How do we work with leadership teams to encourage them to really think about and ask the question, what could possibly go wrong? You know, as an entrepreneur, and I was a multi-time startup founder, you have this irrational optimism, right? Because you have to defy gravity and create something from nothing. And so your brain is wired to just not think about what could possibly go wrong. But if you actually take the time to do that with your team, it can help you see around the corner and maybe anticipate what are the unintended consequences and maybe build new safeguards to help prevent what could really be value destruction for a deep tech company if their technology went awry.
Totally. So what would you to convince, because it's very hard and everyone genuinely believe that they have something that is better and stronger, etc. So the approach we've had is really data. So we say, okay, you think this is good, so here are the companies who've done that. It didn't work, so let's chat to them. so kind of this, having that perspective, what I found is that when we focus on the negatives, they're like, oh, they don't get it. And that's kind of the pushback you get. Oh, you didn't start a company in that space. Well, no, I didn't. No, but it's okay. Here are the people who did, and had similar ideas, and this is what we learned from them. And then they'll be more open to those type of conversations. So that's been a bit of a hack on our side.
That's great. Well, the third hack that I have to share is for founders, for CEOs to take your mission, purpose-driven objectives or measurable outcomes and tie them to your compensation plan for your team. And this is a radical idea that I have seen work so well. I was fortunate to be an investor and board member in an environmentally friendly cleaning products company called Seventh Generation.
Yeah,
and literally the mission of this company was to take care of the planet for the next 7 generations. And the founder, Jeffrey Hollander, baked that mission into the company. And then his predecessor, John Replical, who was the CEO that really scaled that business to over 200 million in annual revenue, John baked these measurable goals like reducing the amount of virgin plastic in the packaging, increasing the amount of community volunteering. All of those metrics were tied to the bonus plan for the team. And it's amazing what happens when you link compensation to these mission-driven objectives. Imagine if Facebook, if their leadership team, if 50% of their bonus was tied to 0 incidents of election tampering, we might have a different Facebook than we have right now, right? I know that's an easy target.
Yeah. That I think for me comes back to the investors as well, because I think a lot of founders want to do that. But if on the other side of the table, the person doesn't understand that this is indeed a value add, it's difficult. We got to convince all co-investors a lot about what we do, the way we do it. Because themselves, what they see that's the market opportunity, but they don't see why this is a market opportunity necessarily. Just it's not their sort of the way they think, so they don't operate in the same paradigm we do. So again, my 2 cents for you guys is a very classic tip, but it's still the most important one, is to try to find investors who genuinely understand what you want to do, the time it's going to take, the difficulty it's going to take as well, and try to take those kind of value-aligned investors.
Thank you so much. Thanks everybody for listening, and we hope you share our enthusiasm that there's risk in not building new technology to solve tomorrow's problems.
That's our conclusion, yeah.
Thank you, guys.
Thank you.